Well, Kinder Morgan just raised $2.9 billion in an IPO, a U.S. record for an offering by a leveraged buyout firm. The deal has private equity giants hopeful that they can finally start cashing out of some of their biggest investments. Cristina Alesci joins me now from our deals desk. Cristina, good to see you.
Thanks for having me on.
What does this tell you about the LBO market?
Yeah, this tells you essentially that if a company is growing, there is public demand for these kinds of deals. It also shows something very interesting. Most of the largest LBOs ever done were done in 2006 and 7. So for a long time, when these deals were underperforming and showing a markdown, essentially what the owners like KKR and Carlyle would say is that, look, it's really too early to judge how these deals are performing. Well, not anymore. That argument has been totally blown out of the water because this offering shows that if it's healthy enough and it's growing, you get it out, you get the cash, the owners sell it to the public markets and They get the cash back and give it back to their investors, which is really crucial this year.
Right, because last year, right, there were several deals that were supposed to go public and then they didn't, right?
Yeah. Caesars is a perfect example of a cautionary tale. That offering was backed by Apollo. This is the buyout shop that took it private a couple years ago.
Right.
And essentially what happened there is they got a little over their skis on that one. They hadn't restructured the debt sufficiently enough. If you look at Kinder Morgan today, there's some analysts that say the company is under-levered. Harrah's not the case. There's still some work to be done on the debt restructuring side, and until that's shored up, they're not going to be able to sell it to a public investor. So this year, we're going to see sort of the bifurcation between the companies that are healthy enough to go.
Right.
Basically, that speaks volumes as to what the private equity owners have been able to do operationally and financially at the company, or the ones that there's just no hope of ever seeing the light of day.
Right, so a real contrast, real black and white contrast.
Real black and white. Like, for example, TXU, Energy Futures Holdings, now called Energy Futures Holdings. That company's got a lot of debt to work through, so we're not going to see an IPO for that company this year. But we will see one for Hilton. But again, very different from the Kinder Morgan offering today.
Right.
The use of proceeds in that case will likely go to paying down debt. It won't go in the pockets of the buyout owners.